The signs are loud and clear. The market is shifting and the numbers speak for themselves. 17% sales value decline month on month, December 2024 to January 2025. First price drop in over 2 years, January 2025. 30% drop in long-term lease renewals by February. And by March, sales momentum slows as inventory floods the market. If you own a property in Dubai, this is the moment to pay attention. At the same time, off-plan is surging. In January alone, 53 new projects were launched, adding over 12,000 units. And more is coming. 72,000 plus handovers are expected this year. But here's the catch. More supply means more competition. And if your property is tied up in a 12-month lease, you can't pivot, you can't win. That's why staying chain-free matters more than ever. It gives you control, flexibility, and the ability to ride the highs and dodge the lows. Let's talk returns, because that's what really matters. Studio short-let yields hit 13.47% this quarter, compared to just 8.58% on long-term lease. That's a 57% uplift on your investment. And the long-term model? Allsop and Allsop's recent report pointed out it's starting to show signs of pressure. Recent figures show a 28% drop in rental transactions year on year. Tenants are pulling back and renewals are slowing. And here's what the data from Property Monitor shows. Q1 2025 recorded 129,388 rental transactions, down from 143,614 in Q1 last year and 142,573 in Q4 2024. If your property is locked in long-term, you're not just losing flexibility, you're leaving money on the table. We're not guessing. Nearly half our bookings are made last minute. That's why we adjust our pricing daily. Not monthly, not weekly, daily. And that's exactly how we kept our 94% occupancy in Q1. Let's talk about what's happening beyond Dubai, because the global picture directly impacts your investments decisions here. The United States has launched one of its most aggressive trade policies in modern history, imposing steep tariffs on imports, with certain countries like China facing dramatically high rates. The results? Trillions wiped off global stock markets in days, investor confidence shaken, and pressure rising on economies across the board. This isn't just about Wall Street. It's real estate, it's capital flows, it's market psychology. And it's already being felt here in the UAE. Because when global uncertainty increases, your local investment strategy needs to be even sharper. Job creation hit a 3-year low in March. Private sector growth slowed to its weakest pace in 7 months. So, what does that mean for your property? It means this isn't the time to be tied down. In volatile times, being locked into long-term rental contracts puts you on the back foot. You lose flexibility, you lose speed, and that's how good investments get stuck. The smarter move is staying chain-free. It keeps you agile and protects your revenue when the global picture shifts. The signs are clear. Prices are softening, supply is exploding, global markets are on edge. But in all this volatility, there's still opportunity. If you stay flexible, if you stay in control, and if you align with a partner that's already ahead of the curve. This isn't about reacting, it's about anticipating. And at AirDXB, we're not just watching the market, we're reacting in real time and helping you move strategically. This Q1 2025 report is just the beginning. We'll be back with updates in Q2, Q3 and Q4, so you always have the insights you need when you need them. Thank you for watching.